Hello everyone and welcome back to my channel. Today we'll be doing the CSEC Principles of Accounts May June 2017 paper 1. I would also like to take this opportunity to say thank you to all those of my loyal subscribers who have been supporting the channel, and if you are visiting the channel for the first time, you are assured that you will get the value, you will learn from this channel. So go right ahead and hit that subscribe button and turn on your notification bell so that you are alerted when new videos are being uploaded. Also, there are ads that will be playing on the videos. Please, to support the channel, please watch them. It is your way of saying thank you for the hard work that goes into preparing these videos. Also, give this video a thumbs up by liking the video. So, as we said, we're going to be doing part 2 of the CSEC Principles of Accounts, May June 2017, paper 1. So, if you missed watching part 1, there's a card somewhere on this video. You can go ahead and click it, or you can check in the description box below. So, let's get into this paper. 36 says, at the end of the year, the capital of a business was $33,000. At the beginning of the year, the capital was $28,000. During the year, the owner withdrew $2,000 for personal use. What is his net profit for the year? So, his opening capital was $28,000. He withdrew $2,000. That's drawings. So we're going to less drawings from the opening capital. We're left with $26,000. He had a closing capital of $33,000. So we deduct that $26,000 from $33,000, and we are left with $7,000. So the answer is B. Let's go to 37 now. Item 37 refers to the following information. Inventory at the 1st of January 2014, $1,500. Purchases during the month, $1,200. Cost of goods sold, $1,400. Now, some of you may recognize that this question is a repeated question. So it says, what is the inventory at the end of January? So our opening stock, 1,500. We add purchases, 1,200, that's 2,700, and then we deduct our cost of goods sold, $1,400. So that's left with D, 1,300. Let's go on to number 38. 38 says, which of the following accounts are nominal? We had explained in detail what are nominal accounts. I think it was in the January 2020 paper 1. So make sure to go ahead and watch that video again if you didn't, if you haven't as yet. All right. So 38 is A, wages and rent. Let's go to 39. It says, a customer who owed $20,000 returned goods valued at $3,000. He then settled his outstanding balance by paying $15,300. The discount allowed to his customer is, so we return $3,000 in wards. So 3,000, we deduct that from 20,000. We're left with 17,000. And then he settled his outstanding bill by paying 15,300 from that. So we less that from $17,000. So we're left with 1,700. So D is our answer. 40 says the purpose of an appropriation account is to, the answer is A, to show how the net profit is distributed in a partnership or cooperative. 41 says, which two of the following items are not recorded in the appropriation account? 1, interest on loans from partners. 2, interest on capital. 3, interest on drawings. 4, withdrawals by partners. This is another repeated question, so we know the answer is B, 1 and 4 only. Items 42 to 43 refer to the following information. Select the two terms below which correctly complete items 42 and 43. 1, debited to the current account. 2, credited to the current account. 3, debited to the appropriation account, or 4, credited to the appropriation account. 42 says interest on drawings is, that is 1 and 4 only. So B would be our answer. 43 says interest on capital is, our answer is C, 2 and 3 only. Let's move on to number 44. It says Mr. Green and Mrs. Brown agreed to establish a partnership and each deposited $5,000 into a bank account. Green and Brown Co. Company, shortened form. How should this be recorded in the books of the partnership? So we know that we're going to debit the partnership bank account $10,000 since it's both Mr. Green and Mrs. Brown and they deposited $5,000 each. So we're going to debit partnership bank account, that is $10,000, and then we're going to credit each of the partners' capital account $5,000 each. So the answer would be D. Let's move on to 45. 45 says, which of the following features is associated with private limited companies? Is it A, family owned, B, shares not sold publicly, C, financial statements published, or D, government agencies purchase shares? We know that the answer is B, shares not sold publicly. 46 says, a company proposes a 10% rate of dividends. A shareholder who owns $502 ordinary shares will receive dividends of, so $502, that's $1,000. And then we find 10% of that. 10% of $1,000 is $100. So the answer is C. Let's go on to 47. 47 says a company earned a net profit of $60,000 for the year ending 30th of September 2016. Proposed dividends were ordinary shares $10,000 and preference shares $15,000. The company decided to transfer $8,000 to a general reserve. The retained earnings on 30th of September 2016 were, so appropriation account. Okay, so here we have our net profit of $60,000. Now we're going to less propose dividends. Now we have ordinary shares 10,000 and we have preference shares 15,000. So when we add those two together, we get $25,000. So $25,000, and then we deduct that $25,000 from $60,000, we are left with $35,000. Now that the other part of the question says the company decided to transfer $8,000 to a general reserve, so we have to deduct $8,000 from that $35,000. We're left with $27,000. So that's the retained earnings. So A would be our answer. And there's another way that we could have worked this out too as well. 48 says, when a company declares a dividend of 15%, the dividend warrant sent to a shareholder who owns 1,500 ordinary $1 shares is, now we know 15 $1 ordinary shares, we know that is 1,500. So we're going to find 15% of $1,500, and that is $225. So B would be our answer. 49 says, which of the following is an example of a cooperative? Is it A, a bank, B, a sports club, C, a corporation, or D, a credit union? We know that it is A, a credit union. Let's go on to number 50. Question 50. Item 50 refers to the following information. So here we have our appropriation account, taxation reserve $10,000, preliminary $250, transfer to general reserve $4,000, preference share dividend $1,200, ordinary share dividend $6,000, and we had our balance of $894.50, and then we had a net profit of $26,106.50. What conclusions could be drawn from the appropriation account above? This has been another repeated question. 1. The company has recently come into existence. 2. The company is engaged in profitable enterprise. 3. More dividends can be given to the ordinary shares. So we know that the answer is C, 2 and 3 only. 51 says, an example of a capital expenditure is money spent for. We know that is D, purchasing a new building. Item 52 refers to the following information provided at year end. So we had cash in hand $6,000, subscriptions due $2,000, rounds $12,000, subscriptions in advance $1,000, bank overdraft $4,000. The accumulated fund is, I think we had worked out this question already, so we know that the answer is B, $15,000. Go on to number 53. Item 53 refers to the following information. We have golf clubs receipts and payments for the month of April. We had donations received on the receipt side, 2,000. Subscription received, 15,000. Cash, 4,000. Bar takings, 15,300. And our payments, rates, expenses, $1,000. General expenses, $3,000. And bar purchases, $10,200. What is this golf's ending cash balance for the month of April? Well, our total balance on our receipts side was 36,300, and on our payments we had 14,200. So when we deduct 14,200 from 36,300, we're left with 14,200. So that would be the ending balance for the golf clubs, receipts and payments. So B would be our answer. Let's go on to 54. It says that the balance in the income and expenditure account represents, that is D, surplus or deficit arising from the operation of a non-trading entity. So let's go on to number 55. Item 55 refers to the following information relating to the pay of different categories of workers in a garment factory. Machine operator, $6,000. Supervisor, $7,300. Maintenance worker, $4,500. And accountant, $10,000. The question says for 55, the direct labor cost is. So we know that the direct labor cost, there we have our machine operator, $6,000. So that would be our direct labor cost. So A would be our answer. Because all the others there would be indirect cost. So the others would be indirect cost or factory overheads. So that would be our answer. And as we know, direct labor, we know have to do with wages that are being paid to workers who are directly involved in the actual production process. So, for example, wages is paid to workers, machine operators, and so on. Manufacturing wage, factory wages, direct wages, and productive wages. So those are some of the direct labor cost that will cover. Let's go on to 56. Which of the following may be used to calculate the cost of production? We know that the answer is D, prime cost plus factory overheads plus opening work in progress less closing work in progress. 57 says the items raw materials inventory, work in progress inventory, and finished goods inventory are most likely seen together on the balance sheet of a, we know that is C, shoe factory. 58 says Miss Ock, as a manufacturing business, the cost of raw materials was $1,900. Rate and rent total $2,000 and factory wages amount to $2,500. The number of units produced was 640. What was the cost of one unit? This has been another repeated question. So we know the production cost per unit is equal to total production cost divided into the number of units produced. So our total production cost, we see here we have a total of $1,900 plus $2,000. We add 2,500, so that's a total of 6,400. And then it told us that the unit produced would be 640. So 6,400 divided by 640, we get 10 units. So $10 would be for one unit. C. Let's go on to number 59. Which of the following is not considered a source document for the payroll? A. Electronic time card. B. Medical certificate. C. Attendance register. D. Clock card. We know the answer is B. Medical certificate. All the others are considered. 60, our final question says, Mr. Amos is employed by a construction company at a rate of $7 per hour. During the week of 6th of April 2008, he worked his basic week of 40 hours. The income tax due on his pay is 20, and he's liable to pay Social Security contributions of 5% of his gross pay. What is Mr. Amos' net pay? Now, I've done this question already on the previous past paper, so the answer is A, 246. So that is it. We have come to the end of the CSEC Principles of Accounts, May, June 2017, Paper 1. Don't forget to like, share, and subscribe and watch the ads. Thank you for watching.